Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. And in a little bit of time, we'll be bringing on David Kol, who is leading Zodiac Gold. Symbol is ZAU. We're excited to have him on the program to talk about his project in Liberia. Don, first, let's talk a little macro. And I did want to touch on something that we were just talking about off camera about the possible wave of JVs that we're starting to see now, but maybe we'll see a lot more of in the next 24 months. I was talking with a CEO who is actually quite a good chartist and analyst. His name's John Newell, and he runs a company called Golden Sky Minerals. The ticker is LCKYF. It doesn't trade a lot of volume in the US, but it trades in Canada quite nicely. They just got a big 20 million JV right around the time of Beaver Creek with Boliden. Previous to that, Rob McEwen, who runs MUX, came into the stock. So, interesting stuff, when you see this in a junior, right? But they don't have a blown out share structure. And I was just talking to a huge client of mine today about this because he was like showing me something that had 800 million shares. And I was like, I'm not interested. And he was like, why? And I said, the share structure, it's just, this thing's never going to move, right? There's going to be constant selling when you don't mind the shop when it comes to share structure, in my opinion. And Golden Sky only has 17 million shares out, I think. So they haven't done the raises that we've seen from companies that are just taking advantage of the environment we're in, where they do the 8 million here, the 10 million there. Like, they're being very thoughtful about it. So I know you can't really comment on this today, but take a look at that stock. I think you'd be interested. Next point here I just wanted to talk about was the macro. We've got, so much going on since we last got together. What are your thoughts of how things are shaping up? We just had a really nice, close on today's action in GDX and J, both closing nicely above support. Last week was kind of rocky. So what are your thoughts here?
I've been saying that, gold is somewhat trapped behind the S&P. So in November, because we had this big correction in October, we had the big high in mid-October, and we had the crash. Basically, gold went down 12%. And I after that correction in gold, I basically said that gold is kind of trapped behind the S&P. It will retrace only if the S&P goes higher. But if the S&P doesn't go higher, then gold's going nowhere, and gold will probably go even lower. And so I do think that gold is kind of trapped here. Now, S&P was up today, I think 1.5%. Gold went up as well, exactly what I expected. And so as long as the S&P can have a Santa Claus rally, then gold can rally too. But we want gold and silver to get, off of that. So we had about a 22% correction in the HUI. We want them to get off of that correction as far as up as we can go before this next correction comes. My feeling is that we will get a crash in the S&P soon. We had 3 2% days in November, which is in the NASDAQ, which is very rare to have that many in 1 month. We had a really weird day where the market opened up 1.5% and then closed down 1.5%. Those are very, very rare. That happened on Thursday after NVIDIA results. NVIDIA's AI is the stock market, and AI is and NVIDIA is AI, right? So NVIDIA stock got up all the way to 210, 212, and then it went down and went back to 210, didn't make a new high. And then now it's down, it's probably over 180 today. I think it was 179 on Friday. Now, the key here, can NVIDIA get to a new high before it breaks down below 180? I don't think so. I think, all we have to do, the most important chart, I've been saying, is the most important chart is the S&P by far. It's basically kind of where gold has kind of been correlated to. And so the decoupling in gold and the S&P, I don't believe will happen until after the S&P crashes. Some people think gold's going to lead. Gold and silver are going to lead. Theirs going to go up. And the stock market's going to go down. Don't worry about a correction. And I keep saying, historically, if you look at history, when the market sells off big, nothing fades that, except for maybe bonds, maybe the dollar, but stocks do not fade that. And I'm expecting a crash in the S&P, weeks or months, but I think we've reached the end of our rope here. I think if you look at all the macro data, it's getting worse, if you will. But it might linger a little while. But I'm uber bearish right now in the S&P, and I think that gold is going to correct somewhere between 3,500 and 3,700, and silver 42 and 43. So I'm very bearish on the cycle low. I'm hoping we don't go to those levels. I've been wrong. I mean, I've been talking about floors, for I don't know 6 months or a year, and my floors have never really been touched. So I could be wrong here. My floors could be too high, and let's hope that's what we're going to see.
Yeah, excellent analysis. Yeah, I think gold for me is that kind of 3,600-ish kind of number. Silver 41 to 42, a little lower than your range. And GDX 67 to 68. I think that level will hold initially. Major support is obviously below there, but GDX, if you look at it, had made all-time new highs this year. Like GDXJ, not even close. So I think there's a lot more to look forward to next year in a lot of those holdings that make up those two ETFs. But let me just try to unpack some of what you said there. So you're calling, you alluded to at first that you think this mining stock correction has kind of run its course, and we're hoping to see higher prices before the next correction. Is that what you said?
Yeah, as long as the S&P goes higher.
Okay. And then secondly, I was reading your newsletter, and you were talking about not just a traditional correction of the S&P, but a bigger correction to 20%, correct?
Yeah, 40%.
40%, right, which is double.
I believe we're going to 4,000. So if you go from 6,800 to 4,000, that's a 40% correction. And I think that's what we're going to see. But I don't think it'll happen overnight. I think it'll be a slow bleed. I think it'll take probably 3 to 9 months to get there, to get to 4,000. But the initial surge downward is always the biggest surge. And then you get a bounce, right? But then the bounce doesn't take you where you want to go, and it's lower lows. So I think we're going to see lower lows and not higher highs once this thing cracks.
Okay. But just playing devil's advocate, like for the average person out there who's, let's say, 35 years old, right, 40 years old, there's a lot of money in that age group. They've seen 09, right, March of 09 being the low that put in this massive rally to where we are today, which has been over 16 years. But they saw kind of a V-shaped move there, right? Summer of 08 started the sell-off, Lehman, Merrill, Wells, boom, 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 into March of 09, which was the low, which we didn't know at the time. And now this huge rally with corrections along the way, but nothing serious, right? The most recent serious correction, I would say, was COVID. So when you look at the COVID chart, again, sell-off, huge V-shaped recovery, right? So clients are really used to this, right? Like, it's going to be fine. We're going to get the recovery. Even if we drop, we're going to get the recovery. But you and I both think differently. We think that this time you're not going to get that snapback rally. It'll fade, and then you're just going to have this kind of malaise period. Is that sort of accurate still?
Yeah. And because if you look back over that rally from 2009 until today, you've always had underpinnings that were able to prevent it from going lower, and were able to push it higher. So recently, and from the last couple of years, basically the AI trade. So we have had a few corrections. We didn't have one this year. We had one last year. So in September of 24, we had a serious correction, and then it rallied back in October because of the AI trade. But now that underpinning, there's nothing left, I don't believe. So the recovery from the last one, and then we had that one. So we actually had two. We had the September 24, and then we had the April of 25. So we've had two significant corrections, and in the last, I don't know, 2 years. Well, a year and a half, 18 months. We've had two serious corrections, and both times V-shaped recovery, because the AI trade was kind of there to underpin it. And I think that AI trade right now is it's fading. And here's the key to the fade, if you will. And this is something Wall Street is in denial of, and I don't think it's going to last long. And it's the parallel processing chips. That's what the Chinese are using for AI. And the parallel here's the problem that NVIDIA has is the parallel processing chips work. You can use those for AI. And guess what? They use 30% less energy. So that means everybody, now that the cat's out of the bag, that we can use parallel processing chips, which is a different technology than what NVIDIA is using. So their competitors in China and Taiwan and in the United States are going to go, let's build some of those parallel processing chips. They use less energy. 30% less energy is huge. And so basically, game theory says NVIDIA has got a big problem here because they're going to have a short window, if you will, of their current technology to thrive, and then everybody's going to be flipping. Everybody's going, I don't want to buy those. I'll buy the parallel processors. They work just as good and they have 30% less energy. So I think the PPU story it's something that's coming, that's going to kind of rattle Wall Street, and so I think that underpinning of the AI is not going to hold up for this next one. First, also NVIDIA's valuation over 4 trillion. It's really hard to hold that if now the growth story is suddenly rug pulled, and I think it is with these GPUs. And so we'll see where that goes. But it's not just the NVIDIA story that I'm bearish. It's the tone of the macro data. We had 150,000 layoffs in October, and that's coming. We haven't seen the October unemployment. We saw September, they had 100,000 jobs. And I think that the labor market's getting weaker. You have that going on. Cost of living problems have not gone away. The wage growth is down to, last wage growth number was 2.5%. So that means nobody's catching up. So everybody's behind the 8 ball in cost of living and they're not catching up. That's a problem. So retail, if the average consumer has cost of living problems, that means the retail sector is weak. That means restaurants are going to have headwinds. That means airlines are going to have headwinds. And then you have autos and you have housing. Those are both headwinds. So, where are the green shoots? Where's the growth? Other than kind of government spending, which always kind of props up healthcare and AI, other than that, you really don't have anything. So simultaneous to this, everything I'm explaining, you have the deterioration of the global situation. Deterioration being that the global south is steadily moving away from the dollar in trade, global trade, steadily moving away from the dollar for reserves. So you have this cancer that's slowly eating away at this global foundation that the U.S. economy is built upon. That's that's slowly deteriorating, and it's not going to improve. And so I just think that the house of cards is it's very slow, close to being rug pulled, if you will. So I'm very bearish. I think once the S&P gets below, say 6,200, somewhere in there, 6,000, I really think that it won't recover. I don't think we'll get an all-time high. Now, the other side of the coin, I'll finish here, is David Hunter has been absolutely right that the stock markets are going to go up, up, up. I mean, he was probably the only guy that was talking about 7,000, 8,000, 9,000. So maybe we'll keep going higher. And David Hunter is a time traveler. We'll have to wait and see.
Yeah, I think Tom Lee and a few other of those guys were probably on the same spaceship. But yeah, I agree with you. I mean, it's only a matter of time. So what we talk about in our newsletter, Don, is what's your upside from this point in something like the NASDAQ or the S&P, right? If you look back from March of 2009 to now, I always encourage my clients to do this as an exercise. Pull up that chart. Pull up that 16-year chart on SPY or QQQ and look at the wealth you've accumulated in your 401k, your 403b, your IRAs, and be thankful for that. Like, that is unbelievable wealth accumulation, right? This is generational. This isn't something that was going to happen maybe to our kids or their kids or whatever. This is crazy growth. And then ask yourself the question, was this because I'm a good stock picker or a good mutual fund picker? The answer is probably not, right? Part of this is luck. Like, we're living in a period of time where things are belting up. real estate has melted up. Like you and I both live in Arizona, right? Arizona is cranking in real estate right now, getting a lot of Californians in here. Is that because we made the right decision? We had this foresight 10 years ago that, Arizona was going to become the next California? Of course not. It's just like we're in the right place, right time. So, as you pointed out, Don, we pointed this out in our newsletter, the Feneck Commodities Report. You've got um, auto loan defaults all-time high, credit card debt all-time high, consumer confidence levels lowest in years. You can go down a list of all this stuff. The one that's interesting that you didn't point out that you touched on it briefly about the job losses or the job growth, I should say. If you look at the last, there you go.
Every one of these lines is a problem with the economy. Every single one. That's a lot
Wow.
That's a lot of issues.
That's
Those
a
are
lot of
problem
issues, I'll
issues.
tell you.
Yeah.
Well, I just want to touch on this, was the non-farm payrolls, right? So we saw uh, previous to the U.S. government shutdown some real issues that you and I have pointed out on the show since August 1st. And then we had the shutdown. We didn't get that data, right? So the October and November data has not been released yet. The numbers we just got were September. That was before Amazon did their massive layoff. That was before UPS did their massive layoff. So those numbers will show up in October, November data, which is coming December 16th. So, like, I think it's very interesting that this all got pushed 9 days before Christmas, right? Like, they're burying this as far as they can, you know, and the average person is not going to be ready for this. December 10th is the Fed, right? The Fed only have the ability to look at September's numbers before they make a decision on rates. So December 16th for me is really important. I don't remember a time when you get two non-farm numbers in the same day going back years. So, that could be a real turning point for, I think, setting a really good, Q1 up for gold and silver.
Yeah, I agree with you. I think December is going to be very volatile. Let's put it that way.
Yeah. Cool. So let's leave it there and bring on our guest today, which is David Kol from Zodiac Gold. Symbol again is ZAU. We'll have all that data for you in the show notes. David, welcome to the show.
Thank you, Don. Thank you, John. It's a pleasure to be here. I follow you, you gentlemen, and I look forward to speaking with you now.
Great. Well, hey, thank you for that. And why don't you just walk us through maybe 7 to 8 minutes here on Zodiac, and then we'll ask some questions where you can elaborate a bit more.
I just want to say welcome, David. I'm looking forward to the story.
Thank you very much. I'm very excited to be here, logging in from Liberia. So
Awesome.
if the internet gets a little weird, just please bear with me. Are we at a full screen?
Yeah, we can all see that.
Okay. So I'll just kind of give you the brief snapshot about Zodiac Gold. We started trading on the TSXV in January of last year. After being private for many years, we've basically been a U.S. funded organization until we entered the capital markets in 2021, 2022, right after COVID. So it's been an interesting ride, but we've been developing the asset, and now it's time to really tell the story. So we've got a massive, and I hate using this word district scale, but we do have a district scale project, 2,300 square kilometers along the Todi shear zone. We're targeting multi-million ounce deposit. We've de-risked this asset, in 2 of the 5 drill ready targets. As you can see, fantastic drill results, 6 meters of almost 20 grams, 9 meters of 10, and so on. And we've been building a fantastic team also over the last year and a half, adding some strategic advisors, Larry Lepard, Michael Cott out of Germany as well. We've got a strong board, Graham Warren, CFO of Goliath Resources, as well as Doug Cater, former VPX of Kirkland Lake Gold, and myself. So why do we love Liberia? This picture, speaks 1,000 words. This is West Africa. 450 million ounces have been discovered, over the years. And if you look at Liberia, you've got, New Liberty Gold Mine, Kokoya, and Pasofino Gold's Hummingbird Resources asset, and that's it. Same geology, same, somewhat jurisdiction of obviously West Africa, but it's just been underexplored. Everyone's been focused on Mali, Burkina, Ghana, Guinea. Now Ivory Coast is obviously the new jurisdiction, but we believe that Liberia is coming on board. I put it in one of the top 5 jurisdictions in the world, up against North America. Most people don't know about it. English speaking, US dollar currency, phenomenal royalty rates, 100% repatriation of profits. You've got the likes of Firestone. Robert Friedland is in Liberia with a multi-billion-dollar investment. You've got Vedanta, you've got ArcelorMittal, exporting 8 to 10 million tons of iron ore. And you have Total Energy just picked up offshore oil blocks. So Liberia is actually, now I believe, becoming a name, and we want it to become a household name as new explorers enter the market. So this slide shows our land package. As you can see, we are phenomenally located. Logistically, I don't believe you could find a better situated asset on the continent. This is the capital city of Monrovia, where my cursor is, our office, and 20, 30 kilometers, we hit our properties. We have multiple iron ore assets surrounding us. You've got Bao Chico to the north, the China Union, and then you've got Vedanta's asset, and then we're depending where you are on New Liberty's concession, 20 to 30 kilometers south of them, where they produced 363,000 ounces last year. And I believe they're on track this year to beat that same type of shear zone hosted system. Similar type of gold deposit, and we're very excited for what we plan on doing moving forward. So this is our flagship property. These are our 5 targets that we are focused on. 2 of them we've already drilled. Arthington, we've really been focused on the asset for the last few years. We've really done a phenomenal job. We've hit significant mineralization in 37 of 39 holes. On this map, it's right here. And as you can see from some of these numbers, they're fantastic. And we're in the process where we just finished an infill and extension program a few months ago, where we actually brought the spacing down to 50-meter spacing. So we're currently, as you can imagine, developing and working on our resource and our other targets across the river as well. So we plan on, fingers crossed, putting something out here in the very, very near future, and we're excited about what we're doing. And Ben, which is across the river, is another one of our targets where we've completed a trenching program. We should have those results back from the lab by Wednesday, and hopefully we'll have those out the following week. And we're planning to mobilize and start drilling that target as well. We've got a 10,000-meter drill program planned there. And we're really excited for this entire trend. As you can see, it's 16-kilometer long strike. But if you look at this entire system here, that's not the best slide. You can see that we've got 45, 50 kilometers of in soil and stream anomaly going from the southeast portion all the way up along strike to the northwest portion. So we've got a detailed exploration plan moving forward from now until the end of the year, as well as the following year also. And we're really excited. We've got a strong team of people on the ground. I'm based in Liberia. I live in Liberia. We run the company from Liberia. We're not your traditional Canadian listed company where there's a CEO sitting in Toronto or Vancouver or Colorado or wherever. I live in Liberia 85-90% of the time. We run the company from here. So, we just, we don't believe in raising money from people and deploying capital where we're not, managing and overseeing it and making sure we're delivering on, what we're telling the street. So these are some of these iron assets that you might have read about. Maybe 6 months, 8 months ago, we identified some USGS banded iron formations that are directly south of Bami Hills and Bami East and China Union's asset as well. And there's an old historical asset there as well. And we're very excited about this. It is definitely not our core focus. We're a gold exploration company, but multi-commodity asset, close to a port. As you can see, this is absolutely strategically located. You've got, Vedante, two Chinese state owned iron ore mining companies, and then you have us. It's a multi-user corridor. There's rail, there's road, there's multiple road, there's multiple ports. So we believe that there'll be some monetization events taking place in the near future on these assets as well. Here's a recent milestones and next steps. So we're planning a drill program right now, 10,000 meters in Ben Town. We've pretty much completed the infilling to 50-meter spacing at Arthington. So we know we have enough. It is a 2.4 kilometer long strike, and the soil anomaly is 4 kilometers. But for us, it's time to tell the street and to show the street our drilling can equate to ounces. So we're excited for the next 30 to 60 days until we wrap up the development work we're doing, and then we plan on putting out an updated resource which includes Ben in Q2 of 2026. Obviously, ESG is a top priority. Most people don't know that we are pretty much 99% local. Besides our financial controller and our director of exploration, our entire team is Liberian. They're all vested. They're all shareholders. They all own equity in our company, and we're in their country, and we believe that they need to benefit when we come out with our discovery. So we're very much on top of our ESG, whether it's scholarship programs or building clinics or, roadworks. It's a top priority for us. As you can see, our team, myself and Tom and Peter Granada, our CFO, who's based out of Vancouver, and we've got Doug Cater, Graham Warren, Cott, Larry Lepard, as you know, and Michael Demeter is on our board as well. So we've got a strong team, and I think we'll be adding some folks to this team as well as our natural growth takes place. We know what we know, and we know what we don't know, and that's one of the things that we pride ourselves on. So what we don't know, we will be adding expertise and talent to help us develop the asset and build shareholder value. This is an interesting slide. Unfortunately, I'm sorry I didn't edit. Our stock has come off a little bit, from this price, but we're still doing well from where we were at the beginning of the year. 124 million. Some people may say that's a lot of shares, but what people don't know is a large portion of these 24 million shares. I think, I don't know, 70 to 80 million shares still have legends on, because our U.S. shareholders, they're not traditional traders. They invested in this company many years ago. The fact that we've been able to manage and stay alive through horrible gold markets until we reach now, they're very happy with the progress, but it is very tight. We haven't raised a ton of money in Canada, although we did raise $3.5 million when we initially entered the market, but our US guys took 2.5 of that, and the subsequent financing that we've done all after that, our insiders and existing shareholders did the bulk of that. So we pride ourselves on the fact that we don't have 124 million shares in the float. It's much less than that, and we plan to keep it tight. Know who the major shareholders are. We've got multiple 10% insiders that we're proud of, including myself and others. And we plan to keep it tight and bring in the right type of investors as we move forward. And I can run through some of the appendix, some of the work we've completed to date. But I think that's pretty much Zodiac in a nutshell. There are some topics I'd love to comment on. As we have signed an exclusivity agreement where we're in discussions with a mid-tier producer. But unfortunately, legal told me to keep it quiet and focus on the asset. And regardless of the deal, the asset speaks for itself. And I think the world will see that, we do have a world-class asset.
Thanks, David. Yeah, I appreciate the overview. Can you go back 2 or 3 slides to the share structure?
Yes.
There you go. So you had mentioned here about 125 million outstanding and 70 to 80 million still has legends on it. So I guess the question is, obviously you've got U.S. interest here. Why not have a U.S. ticker, or is that coming?
It's coming. Our lawyers have already introduced us to the firms, the legal firm that will be doing the listing for us. So that's on its way. I think it should be done by Q1 of 2026. Since I did my first show in Germany in May, and there was lots and lots of feedback. After it was a disaster getting there, but once I got there, I was able to get there on time, and I think I was the last presenter, and we had a big spike after the presentation. And lots of European investors have been reaching out, and Michael obviously is based in Germany, and he's on our advisory board. So we will be listing there as well, so we can attract foreign investment, because the Germans, the Brits, the U.S., our U.S. investors, they're not as nervous about Africa as a lot of the Canadian capital market folks are. So we see the future, in Europe, the UK and the US when it comes to financing.
Yeah, and I'll just
so it makes sense to cross list. Absolutely.
Good. Yeah, I'll just throw out a kudo to Michael Cott. I haven't talked to him in a while, but we're friendly, and yeah, he does a nice job. So and of course Larry at the bottom there is partnered with Don on some things. So that's very interesting. It seems to get a deep bench there.
Yeah, Larry's fantastic.
So tell me a little bit more about the iron ore, because we both like a stock called Cerrado Gold, CRDOF, and they have an iron ore asset that gets no credit, we don't think, in their valuation.
Sure. So, this really just came about accidentally. Multiple companies reached out last year saying, what are we doing with our iron ore assets? What are we doing with our iron ore assets? And I'm like, iron ore assets. So I called up Tom, our director of exploration. I said, Tom, pull up all the historical USGS stuff. I started, researching as well. And I believe in 2007, 2008, there was a company, West Peak Iron, that had the license for 4 or 5 years. They were an Australian listed company, and they drilled it. They have they put a JORC compliant resource on the iron, and then unfortunately when he bought, abandoned the project. So we didn't pick up these licenses. We just completed our first year of exploration on these licenses. So, we didn't always have it. After we hit, significant mineralization, at Arthington, we made the decision to pick up as much of the Todi shear zone as possible, because we realized that the gold mineralization, coincides with the shear zone. So this whole portion here was empty. No one had a license. No one thought that there was gold or iron ore so close to the capital city of Monrovia. So we ended up picking this up. We realized we had the resource, the historical resource. So we plan on spending a little money to advance it. We announced a press release with Vitol a few months back. So we've got some real interesting opportunities on the horizon there. What we exactly do, we're not 100% certain yet, but we know there's value. we believe that we could advance this through systematic exploration. The goal would be to get it to 3, 4, 500 million tons, because there's multiple offtakes here available with our neighbors. We got 3 different mining companies, and then we've got a 4th one, Moffee Creek, coming online soon. We've got multi-user corridor, which is key. As you gentlemen know, iron ore, it's all about logistics. So we don't need trains. We don't need a river. We can just truck the ore to the port. So the focus would be identifying DSO, direct shipment ore. So we've been into the field. We've done sampling. We know we've identified high grade 62, 63% material. So now we're going to follow up on all of those targets. And then identify drill targets, because we really, you don't really need 100 million tons of DSO. 500,000 tons, million tons really turns into a substantial project, especially if you could back it up with 2, 3, 400 million tons. There's billions of tons all around us, so it only makes sense that we know it's hosting the iron ore from the formation, but we need to just do some systematic exploration, and I think we'll have a tremendous asset that will be very valuable to our shareholders, and I think our shareholders really undervalue what we actually have.
Great, that's excellent information. Thank you. I'll pass it over to Don to talk about the gold angle.
Yeah, for Vital, you said you have a strategic agreement. What exactly is that agreement?
So we signed an MOU with them, and it's offtake, so it's pre-financing. It's they would take responsibility for selling the ore as well, and basically be our partner. So we're working through this currently. And we believe that there's tremendous value. I think we'll see here in the near future exactly how it translates, but it's a strategic asset that people see value in. So when companies like Vitol and others want to do business with you, you gotta feel and know that you're sitting on something that has real value to your shareholders. So we're going to expand that, and as we move forward, we'll be putting out more releases.
Is that an offtake agreement, or are they going to come in and operate it themselves?
No. They're not operators. They sell iron ore. So it would be more of a, pre-finance. Once we get, 10,000, 15,000, 20,000 tons on the ground, pre-financing mechanisms kick in. So we wouldn't have to dilute, our shareholders for capital. So we could actually bring in a mining partner that would be able to mine it. And then Vitol would provide capital as a pre-finance. And then obviously when they sell the ore, they would recoup that investment.
All right. Now in your gold properties,
Yes.
it looks really exciting. I mean, I get excited when I see 16-kilometer strike zones. That's a pretty long one. You got a lot of yellow dots there. That looks like a lot of gold potential. So you're currently your deposit size? It's kind of early innings here because a lot of it is surface. You haven't drilled a lot of holes. How many meters have you drilled so far?
Total, well, for example, Arthington, for example, we've drilled roughly around a little less than 7,000 meters. So we've hit significant mineralization in 37 of 39 of those holes, and we've brought it down to 50-meter spacing. So
Right.
I think as we develop it, I think people will get very, very excited when they see the ounce to number of meters drilled.
Right. So basically, a lot of your focus so far has been just surface exploration. You haven't drilled very much yet. I mean, 7,000 meters, nothing. I mean, that's a small 1-year program, right?
Yes, and our biggest struggles has been the capital markets. So we've been private for many, many years. Our original shareholder base, they're not exploration folks. They're real estate people and lawyers and Bay Area investor types. They're not exploration investors. So now as we entered the capital markets in Canada, the whole idea is to attract the larger financing to do the 20, 30, 40, 50,000 meters.
attract financing or finance it yourself. So iron ore is usually at the surface where you just dig it up and put it in a truck. I mean, that's pretty, iron ore is one of the easiest things to mine. Isn't that correct?
Yes, sir, it is very easy and easy to drill and to build a resource. Absolutely. So yes,
And
we're
you,
exploring. I know what you're thinking, and we're definitely exploring all of those avenues.
right. So if you can, the key here is permitting. So how long would it take you to permit those iron ore deposits to get them into production?
I personally believe the way this new government is operating, it's all about foreign investment, foreign investment. We could probably go through the process and do it within 12 months.
Yeah, that's amazing. So yeah, so you could use your iron ore revenue to finance your drilling. That's one strategic possibility. Now, as far as your long-term objectives here, I mean, in Africa, the one thing that's ideal, if you will, is you these are open pit. Usually, these are open pit mines that don't have a huge capex. So
Correct.
you don't necessarily, lots of places in the world, they end up building these massive mines, but you don't necessarily have to. I mean, you can start out at 50,000 ounces a year and then slowly, grow, if you will. So with your property, I mean, it's over 500,000 acres. The size of your property and all these five deposits, in theory, this thing could grow into a monster company if with your insiders, if you really wanted to do it. I mean, if that was your vision, is your vision to do that, to build this into a monster company?
Absolutely. We want to build this into a multi-billion-dollar company, whether we do it ourselves or we do it in partnership with another firm. Absolutely. We know there's ounces here. We know that there's a possibility for 3, 4, 5, 6, 7 million ounces. We've done the surface work, we've done the soil sampling, we've done the trenching, we've done drilling. It's now just deploying enough drill rigs to drill it out, and then defining various
So,
resources on the different targets.
all right. So one of the things I like to do is I like to put ideas into CEOs' heads. And so I'm going to bring that up to you right now. So normally what I'm about to propose wouldn't be feasible. It definitely wouldn't be feasible in a bear market. The only time it would be feasible is in a bull market, which we're entering right now. So in a bull market, you have a lot of companies and a lot of companies with a lot of deep pockets who are looking for opportunities. Now, in a bear market, they don't want to spend their money. They don't want to do acquisitions. They don't want to build mines. They're just looking for accretive deals, right? But in a bull market, this is when companies get aggressive. And if companies get aggressive, you're going to get basically the phone starts ringing off the hook. Now, it's probably, you said you're already getting phone calls already, but we're not even into the mania phase. We're at $1,700 margins right now. But when we get to $2,500 margins, and in tandem with the $2,500 margins, Wall Street decides they want to own mining stocks. So money's flowing in. Bankers are basically writing checks. Here you go. Here's your check. It's easy to get money. And people are thinking in terms of these $2,500 margins are here to stay. And that type of an environment, a project like yours, a company like yours is in a very powerful position with leverage, right? So what you could do, and I'm putting this idea in your head. I mean, you can because you have 30% insiders, you don't necessarily have to sell, is that you can just keep drilling the property out, right? Showing the value, and then wait for the phone call to ring. And when somebody says, yeah, you want to do a JV, you want to sell, you basically, you have a number in your head. You have a number already. You're like, yeah, we do. We are open for negotiation, but this is the starting point. This is the starting point. Okay, so here's your starting point. Your starting point is all of your properties, maybe not the iron ore, but all your gold properties, they can have for 50% free carry, and you don't pay a dime. You don't pay a dime for drilling. You don't pay a dime for development. All you do is sit back and watch them basically do all the development, everything, and all your shareholders get 50% of the profit for the life of the mine. Can you imagine how valuable that would be? Now, historically, that phone call, nobody would take that deal. As a matter of fact, nobody will take that deal today. But in 12 months, when margins get above $2,000, you think about all the quality mid-tier producers there are in West Africa. There's probably, 5, 6, 7, right? One of them will basically do it. And basically the word will get out. Yeah, Zodiac will do a 50% free carry. Well, hell, I'm not doing that. That's stupid, right? So half of the companies will say that's stupid, right? But the other half will say, it's intriguing. That's it. Yeah, maybe it's not a great deal for us, but that's very intriguing. They might have 10 million ounces. We better buy it now, right? So if you can show a path to 5, 10 million ounces, somebody might do it, right? So I think that would be an ideal outcome for your company. Now, again, it wouldn't happen today, but it might happen in 12 months. I think 50% free carry deals are going to happen. I really do.
Really?
Because I think that they're the best outcome for shareholders. Yeah. Now, right, it would only happen in a bull market, but somebody would do it. I mean, you wait, but that's what I. Now, okay, David. Here's the kicker for my whole strategy. Is they might say, no way, I'm not doing a 50% free carry. It's not happening, right? And then they'll go, but then they'll come back later, like a month later, and they'll say, okay, David, we'll do 75% free carry. Right? And that's the floor. At that point, you go, oh, this is interesting. Now we can negotiate. You can basically go, we're close, right? Then you go, you get 80% free carry. Okay, I'll take 80%. That's fine. So you got to pay 20%, right? You got to pay 20% of the CapEx, 20% of the drilling. Or maybe you do an 80% free carry until CapEx. But you want to do the whole property though. That's the one thing they're not going to want to do. They'll go, okay, we'll do 80%, but we're only going to do it on Arlington. You go, no. We want 80% on the whole property.
I definitely think any mid-tier would see the value in the entire property for sure. I think we
right.
could. Yeah, I mean we are in this exclusivity period till December. So it'll, it's interesting, and your perspective is spot on. And I also I've listened to quite a few of y'all's shows, and I like how you calculate. You calculate like you don't understand why people are calculating gold prices at 2,600 and 3,000. You think everyone should be, a lot of these people need to be calculating gold at 5,000.
Exactly.
And it makes a lot of sense because over the next 10, 15 years, it's inevitable. We're going to get there. And I was.
Yeah, I want to interject here. I'm sorry to interrupt you, but the key here is the location of the properties, right? That's the key, because I think the gold price will stay, elevated, and these high margins will stay for an extended period. But the key here is you want to make sure, if you're going to make those kind of investments, that you do it in a good location. And I think Liberia is one of my better places to mine in West Africa. I like Todi, I like Ghana, I like Liberia, I like Senegal. Those four, I mean, I'm good to go in those countries.
Yeah, I think I wouldn't live here if I didn't I feel safer here than I do in the U.S. I mean, and it's just the reality. Liberia is a wonderful country. It's on the growth spurt right now, and I think the government is doing everything in their power to attract foreign investment. We've got a constitution that hasn't been changed or amended. We've got a great mining act that's, they're making some adjustments to it, but it's all in line with working with, the Liberia Chamber of Mines and other organizations. They're not just waking up one morning and, making these crazy decisions like some of these other jurisdictions are. So I agree with you. I think Liberia is fantastic. And I think we'll see, other companies start entering the market here as they realize that Cote d'Ivoire, there's not enough space left, and Ghana and other, countries are just not as stable.
All right. Yeah, it's a very good story. I usually don't like early drill stories because there's just so much risk. But yours looks really interesting at this valuation. It's exciting.
Thank you. I appreciate it, and we're really excited, and yeah, we're excited for the future.
Well, thanks for coming on, David, and sharing your story with us. And we'll look forward to hearing from you in Q1 with regards to the U.S. ticker and any other developments you have on the gold side.
Thank you. It's been a real pleasure, gentlemen.
Before we go, I actually have one final question for you, David. Do you think it's okay? Do you think, because you have these really big, it's a big area and you have like 5 different areas. Do you think and it's basically all near surface. Do you think it's possible that you will find like a big one, like a big, 2 kilometer by 2 kilometer? You think that's a possibility, or they're going to be smaller than that? 1,000 by, what do you what in your gut? What do you think you're going to find on these properties? You're going to find any? Are you going to find any big open pits?
I personally believe we will. I think we will have large open pits, and then I believe we will also have some satellite pits that might be smaller, 500,000 ounces here, 1,000,000 ounces there. But I think in one of that youth camp trend, just how the soils hang together, how the trenching hangs together, and how the drilling at Arthington crossing the river into Ben hangs together. I believe there's something significant there. Definitely.
Excellent. Because that's the company maker, right? Because
yes,
once you get that that big one, then you just start finding the small ones all over the place, right? Okay.
Absolutely.
All right. Thanks.
Thanks, David. All right, Don. So good story here. I know you do a lot of work with Larry, who's an advisor to the stock, and I guess we should point out if you own any ZAU, if there's any ownership by you currently.
I do not own it, but I probably should. Yeah, I know it's a stock Larry likes. I don't like early drill stories. I'm right now I'm focusing mainly on developers and producers, but I do dabble in them. I do, I have like 8% of my portfolio is exploration, but a lot of it is optionality. But I actually see this stock as a possible optionality play, even though it's early innings. But if you think a company's going to get 3 million ounces, you can kind of front run that. And so I like the fact that he's got like 5 deposits and all of them look like mines. So that's very exciting. I can see why Larry likes it a lot. So yeah, it's definitely intriguing. I mean, if you like drill stories, this one's definitely intriguing.
Mm-hmm. Yeah, and there's a couple of things we can point to. Like one is Extra Gold, which is a holding for us, XTGRF. They're in Ghana. There's, according to James, who you and I interviewed, there's 8 producers. They're the 8th sized producer in Ghana, right? The smallest. But that stock really took off after we interviewed them. They were at $1.45. They're trading at $2.38 now, and that was this summer. I mean, it just goes to show you some of these stocks really when they get their word out, whether it's through an interview, through a conference, through just social media, I don't know. It's got to be a combination of something, right? By doing nothing, you don't get that same love in the market sometimes. Like Collective Mining is a good example, right? I met Ari Sussman summer of 2024. And then you met him at Beaver Creek, I remember. These guys have a lot of gold in the ground. And yet last fall, when they attended my conference at Four Seasons Fort Lauderdale, they were trading at $3, maybe $3.25, right? They didn't have the uplisting yet. Stock just absolutely exploded after that. And it's only, looking back a year ago. So there's so much opportunity in some of these larger gold properties, right? Like you pointed out the kilometer strike here on this stock. Like it's like massive. I mean, a lot of the Canadian stocks boast about 2 or 3 kilometers.
Yeah. Yeah. It's exciting.
Yeah. So, well, I'm glad we had David on, and hopefully we'll have him back on next year to talk a little bit more about the story.
Yeah, especially if he has a nice discovery.
Absolutely. Well, Don, we'll leave it there. Thanks again for all your insights, and thanks to all our listeners for checking us out. For those of you that are interested, we still have some room at both my Four Seasons Fort Lauderdale conference, which is coming up May 20th through the 22nd. We also, right before that, are going to do Washington, D.C., which is my hometown, May 17th through 19th at the Grand Hyatt there, right in downtown by the White House. So we hope that you'll email Don or myself or hit us up on social and let us know if you're interested, because it is limited availability to get into these events. We don't do like the PDX sized events where everyone and their mother comes. These are going to be smaller boutique kind of style investment, opportunities featuring companies, like Collective, when, gosh, no one was really tracking the stock. And we try to do a good job of finding those opportunities for you as investors. So thanks again, everyone, for listening, and we'll leave it there. Have a nice one.